Computer Warehouse Group today listed its shares on the Nigerian Stock Exchange. Now, this new listing is expected to boost the market capitalization of the NSE by about 14 billion naira, while the company would be the highest capitalized security in the ICT sector of the exchange. Now, for more on this, I'm now being joined from the Nigerian Stock Exchange trading floor by Austin Okere. He's a group managing director at Computer Warehouse Group. Thank you so much, Austin, for taking the time out to join us.
Thank you very much. Really appreciate it.
Well, let me start by congratulating you on this listing. It's the first listing the NSE will have for the year 2013. Now, you're listing 2.5 billion ordinary shares at 5.48 kobo per share. I just spoke to a trader at the market a few minutes ago, and he sounded a bit concerned about the pricing. He says that the market doesn't have adequate or any information at all about this company and how you arrived at the pricing, and he's concerned about how the market will receive it. Your thoughts on that?
Well, I think that the pricing is done by IBTC, Stanbic IBTC, which is one of the global best and also the largest here in Nigeria as an issuing house. And it's been looked at by the Securities and Exchange Commission as well as the Nigerian Stock Exchange. But my own perspective to it is that the information about the company is well known. It's one of the largest ICT companies in Pan-African Africa, and the information regarding what we're doing is more important than just the historical financials, even though that's also important. So if you look at what we're doing today, we are going from an infrastructure company to a services company with large managed services contracts, and we are going more into virtual products and virtual channels. To give you two examples, we are the IP behind the Diamond Yellow account that was announced by MTN and Diamond Bank that is going to bring inclusive banking to 55 million subscribers. We also have what we call the microfinance banking application in the cloud that allows microfinance banks to log in and use and pay as you go. The latest one that we have just launched is the ERP for small and medium enterprises, of which there are about 17.3 million of such companies in Nigeria. Even if 10% of them use it at $100 per month, that's about a contribution of $10 per month for $1 million. That's about $10 million per month of margin. In terms of the historical and the forecast and the financials, it's all in what we call the prospectus, which has been made available. I believe that the perception that there is not enough information is because ICT is evolving, it's new. There are very few on the exchange, so you cannot make comparisons because we are way beyond what companies have already listed. But we have also provided information regarding peer comparatives with companies like Business Connection, Daytech, which is listed on the Nigerian Stock Exchange, even though it's a South African focused company.
Okay, Austin, I'm going to have to come in here now. Previous listings are looking at some of the companies that listed a few years ago in the ICT sector of the NSE. They haven't done too well. And going back to my conversation with that trader, he did say that there was a lot of excitement back then. But a few years later, many of the stocks are not trading at the value that they were, when they listed. And so he said that might make investors a little cautious and careful with this new stock. So what kind of value do you bring to, or does Computer Warehouse Group bring to the table? And what would you be doing differently or giving differently to investors away from the other ICT companies on the NSE?
Well, first and foremost, I believe that the stock price reacts to performance, no doubt, but it also reacts to perception of potential. And more so, it reacts positively to forecasts if you are not wide swings away from it. What is going to give us this three? The performance is there. In terms of the market that we're in, we're going from ICT market of $7 billion in 2010 to a projected $26 billion in 2020. And we're going more towards the virtual products market, where we are not talking about supplying stuff, which is what our contemporaries that have listed before have done, but we are talking about reaching everybody through cloud computing. And we have also looked at the mix between episcopal sales, which is outright sales, and recurrent revenue. If you have a strong recurrent revenue base, then every other one becomes contribution margin. So it prevents you, or it dampens all the swings that comes with the forecast. Our forecasts are solid, and I believe that it's very conservative. Based on what we're doing, we have presence in 4 countries, and we have already launched 3 products, which we are on the uptake with. So our circumstance, I think, is a bit different. We also provide end-to-end ICT, which means that we have a software, hardware, and communication practice, and these feed on each other. Our contemporaries will probably have a software practice or a hardware or a communication. If you take, for instance, ATMs, we have 30% of the market of the installed roughly 10,000 ATMs. We are supporting 3,500 of them, and it's projected that we're going to be having about 50,000 ATMs in the next decade.
All right, Austin, I mean, obviously there's a lot that your company is doing, and obviously from what you said, there's a lot of value that you're going to bring to the table for the market, but we're going to have to leave it there.